Hey,
How are you
Practicing the
guys?
strong hands for this dip here.
I like that. I got Brad and Jimmy on the podcast today. Uh, can you guys just quickly introduce yourselves, very quick, before we get into it?
yeah, so I guess
Yes,
I'll go
go ahead,
first,
Jimmy.
or you go first. Hey, my name is Jimmy. I like to call myself the prettiest boy in Bitcoin. I'm a relatively new maximalist. I was converted. The cult got to me in 2020. Yeah, I'm a lifelong entrepreneur and Bitcoin investor.
Awesome, awesome.
I also am a lifelong entrepreneur, serial entrepreneur. Many failed startups, a couple successful ones. Nothing really exited of anything of note. But then back in 2011, when I was first getting interested in protecting my money that I was making from my entrepreneurship endeavors, I found out about gold, and then I found out about Bitcoin, and so I started mining Bitcoin in my basement in 2011. Been into Bitcoin ever since, and pretty much now at this point, over the last 5 years, Bitcoin's been my full time thing. I kind of retired as a serial entrepreneur. Now I do venture capital investing in other entrepreneurs, and I just kind of educate on Bitcoin and buy more.
I love it. I love it. There's a lot of similarities between us. I think this is going to be a good chat. So, um, I've been in Bitcoin probably since like 2017. I'm not a very technical person. I do understand the high level what Bitcoin is, what it does, why I believe it could be extremely valuable and useful to everyone. And I think there's a very big market of people like myself who understand the high level why Bitcoin's valuable. I personally know a lot of these people in my network in that category who are also invested in Bitcoin in some capacity. So I'm hoping to talk to these people today specifically. So there's a lot of chaos. I want to start with the market right now. There's a lot going on right now in the markets. We're walking through what I think are uncharted waters in a lot of ways, and it seems like everyone is either trying to stay afloat, hang on to a life raft, catch a life raft, and hopefully escape on the other side in a better position than when they started. So, how are you guys viewing what's happening right now in the market, like with Bitcoin, crypto space specifically?
Jimmy, you want to take that one?
So I've been lucky to be surrounded by Bitcoin maximalists that have been through this before, and so one thing about when you get into this community investors is you come across guys that have experienced downturn after downturn after downturn. Being a Bitcoin investor, you're sort of going through a hazing process. It's like I've been prepared during the bull run. Everyone was talking about the 80%, 90% drawdowns that they've experienced in 2017, 2015, and etc. And so there's a lot of we always prepare for these moments. Of course, like this downturn is special because it's like it's brought on by Fed policy, what the U.S. government is doing. Like all asset prices are being affected. I think it's rather interesting. Makes me a bit more bullish about Bitcoin. That Bitcoin is sort of tracking or correlated to Nasdaq, right? So it sort of lets me know that adoption has reached a level that, like, look, if I'm liquidating assets that are risk on assets that are tech companies, that Bitcoin is also affected. So that means to me that a lot of investors that are invested in tech are also invested in Bitcoin, and so they're liquidating all of those positions at the same time. That's a signal to me. That's a positive signal to me. But yeah, like I saw, like everyone talks about this. Everyone talks about the volatility. I was prepared for the volatility. I'm still up. All right. Um, I was also blessed enough to invest in 2020, right? So, I'm still up, but whether I'm up or down, it's irrelevant because, as they always say, when in doubt, zoom out, and you sort of see Bitcoin's trajectory no matter what. Or in a 3 to 5 year horizon, you'll be okay, right? If you think in terms of 3 to 5 years when you're investing in Bitcoin rather than year to year.
Yeah. I totally agree. I mean, I think there's definitely a lot of panic out there. For me, I'm the same as you. Like I'm also up. Luckily, I got in earlier, but I see this as very long term. I don't trade Bitcoin in any way. So, but at the same time, like my entire portfolio asset allocation is not in Bitcoin. It's an amount for me personally that's if I lost it all tomorrow, like I'd be totally fine, type of deal. So that's how sort of I'm positioned for now. But for me, like it's actually been the allocation has been trickling up ever so slightly. Um, Brad, what's your sort of overall take on what's happening right now?
Well, look, I was expecting Bitcoin to drop to 20K and maybe even a little below 20K since China banned Bitcoin last year. And watching the 2020 COVID response, I was actually like expecting us to go into some sort of great recession or something back in 2020 after even before COVID. So like in 2019 actually when the Basel Accords, which are the set of regulations that are supposed to apply to other global banks, when the Basel Accord they ramped up after the 2008 crisis, they ramped up so that they called this the stress test. It was the rules that the banks had to abide by in order to be fully safe and able to handle systemic issues and exogenous events like a COVID shock. So when they got into 100% full effect, which was 2019, the shit started to hit the fan because the Federal Reserve started to say that well they were not buying any more treasuries, so they weren't doing any more quantitative easing. They started trying to raise interest rates, and banks started to freeze up from lending to each other and charging higher and higher rates. So we've been just under this false regime of like low interest rates and easy access to credit for the last 10 years, and it's inflated all asset bubbles. It's inflated the housing bubble, it's inflated stocks. SaaS company valuations were going crazy. You had the whole SPAC thing happening. So Bitcoin is benefiting in a way from this same access to easy money, this money printing. When the government responded to the shock of the COVID policy with just printing tons of money and keeping interest rates low, and then doing QE with the Fed, it did cause people to just go ham on like whatever they were speculating on. There was people that were buying Pokemon cards. I had a buddy that quit his job to start buying hockey cards in Halifax. He started a hockey card store and he was just buying up yard sales full of hockey cards, and he ended up making like 100K flipping hockey cards for the year. I mean, people were buying like whiskeys and sneakers. Like I got so many buddies that are like the goat, the shoe goat they call themselves, where they're just buying up all these different types of shoes and flipping them for
Mhm.
thousands of dollars. So in that environment where everything is all of a sudden worth something because of the massive glut of dollars and easy access to credit that's in the system, yeah, you're going to get like inflation of bubbles. And so we saw that to a massive degree with the SPACs, with the SaaS company valuations, with cryptos like NFTs, altcoins, DeFi, all this stuff. Bitcoin is totally separate from all that stuff in crypto. And it's best for people to try to understand, like a lot of people that came in 2021 didn't understand what they were buying. And a lot of people in 2021 that were in the crypto industry were treating Bitcoin as their base collateral. Just like in the traditional system, the US Treasury is the base collateral. So hedge funds in the financial system use U.S. Treasuries through the repo markets and the interbank lending markets as their base collateral to be able to go off on the risk curve and make money with all their different instruments. They borrow against their treasuries and their mortgage-backed securities. Those are the tier one assets. Well, when the bubble's inflating, everybody wants to make money, so they go and they go into like the more exogenous risky stuff and they try to make a spread on that. Well, that's what happened in crypto. I mean, you got these giant funds like Three Arrows Capital, which grew from half a billion to like 20 billion based on using Bitcoin as the base collateral. Like the Bitcoin is like the US Treasury in the crypto world, if you want to look at it like that. So it's the most liquid, it's the deepest, most trusted base collateral in crypto. And so, of course, in an environment where everything's inflating and people are going off on the risk curve and they're trying to make as much money as they possibly can because they see the conditions are here, it's like a free for all. You can just throw a dart and make money. Well, they're going to go and do all this risky stuff. And they rebuilt the exact same financial system that we're trying to get away with Bitcoin. They rebuilt it on a blockchain and called it DeFi. And they did the same toxic stuff that the guys in the traditional system did to bring down everything in 2008. They started doing synthetic, uncollateralized loans and having these chains of rehypothecation, basically chains of like relending things over and over and over and back and forth to each other. So in a system like that, where we saw what happens in 1998 when Russia defaulted on their debt, this big hedge fund called LTCM, they went bankrupt. And that was a risk to the rest of Wall Street, even though it was just this one fund. LTCM was billions of dollars of exposure to Russia's debt. It took them down, but because other banks had exposure to them, it almost took all the other banks down. So it was like Bear Stearns and these other big banks in 1998. They were exposed to the failure of this LTCM hedge fund because of this one event, Russia defaulting on the debt. Well, they didn't do a bailout then, but then in 2008, it was like the risk was still in the system, and everybody was doing that with the mortgage, the kind of like subprime mortgages and other synthetic stuff. And when the liquidity freezes up and people start to think like, oh, somebody's not solvent here, I'm going to pull in all my base collateral, I'm going to pull in all my debt, I'm going to call in all my loans. Well, then you see who's swimming naked when the tide comes
Yeah.
back in, right?
Yeah.
And you have a central bank that can bail out the traditional markets. That's what QE was. That's the Fed. The Fed works with the Treasury. The Treasury orders stimulus and the CARES Act and all that stuff. Well, in crypto, you don't have a central bank that can bail out all this stuff from failing. So right now we're seeing Bitcoin get absolutely trounced because there's a bunch of these protocols that were pretty much acting like the big banks of Wall Street, and they had gotten significant size treasuries. And this was all supported by tier one VCs like Andreessen Horowitz and trading firms like Jump Capital, who are like massive outside of crypto. They're massive like leaders in their respective industries. And for some reason, all these folks decided that it was a good idea to rebuild all the toxic nonsense that was responsible for bringing down the economy in 2008 and do it all on a blockchain and call it innovation. And really, it was just there's nothing really valuable there in the token schemes and these unsecured lending schemes and all these Ponzi-nomic lockups. And really, we're seeing it just all get flushed out. And unfortunately, Bitcoin is kind of a base collateral for these guys. So they're selling it off because they're getting margin called. And you had Celsius, which is a huge, basically like insolvent bank in crypto, which had to sell off a whole bunch. They got liquidated a bunch of Bitcoin. You had Three Arrows Capital, which was like one of the biggest tier one crypto hedge funds, which had gotten liquidated as well. And then obviously Terra Luna, which was a massive wildcat bank almost. They had like 40,000 Bitcoin, I think, and they had to sell it all. So you just have this massive sell pressure from all these over leveraged big institutions. And it all stems back from easy money policies and this
Mm-hmm.
idea that growth is growth is sustainable when you can just continually increase the money supply and keep interest rates low. That'll encourage healthy growth. I mean, obviously we see that everything is kind of blowing up. The only thing that hasn't blown up right now is the real estate market. And like you're in Toronto, right? So I imagine you're probably like, what are you thinking about the real estate market in Toronto? You must be kind of like like you're like Wile E. Coyote off the cliff and you're like, don't look down.
It's the sort of the real estate market here is extremely unstable, unsettled right now. It's like the first time ever where I have no idea what my house is worth, like by a big spread. Because like it's just trying to figure itself out right now. as with seems like every other asset. So you talked about a lot there, which I want to unpack a little bit. Um, so first, so again, I want to speak to the people who are not so technical. They understand things on a high level, smart people. But so one thing I want to ask, Bitcoin obviously being a scarce asset, and knowing that a lot of people invested in Bitcoin have a similar view on the world and the economy and the system as a whole. I think you would assume that it would trade almost like a hedge against currencies and markets, but instead it's trading like in direct correlation. Why is that?
Jimmy, you want to go?
So you sort of can't. I mean, you can't divorce Bitcoin from the rest of society. And I mean, in fact, I think if Bitcoin existed in a vacuum, it'd be highly problematic, right? I mean, if you put us all in a situation where we need cash, we need liquid cash, we're going to liquidate anything we can. That's that's basically in our portfolio. Whatever we could afford to liquidate, that we could liquidate relatively easily. And Bitcoin is just one of those assets, right? And so I think, like I said, I'm pretty bullish on Bitcoin because it means that Bitcoin is becoming more and more a part of our lives. That Bitcoin is also affected by the federal government, by monetary policy. This is a good thing for Bitcoin. And I think moving forward, it's going to be more and more correlated with the rest of the macro environment, macroeconomic environment. So, so
Mhm.
yeah,
I
I still do think it's a hedge, right? I think Bitcoin is the best savings technology we have. It's the best savings account we have, right?
Yeah.
It's the only place where you could put money right now and be sure that it'll probably your wealth will grow 3 to 5 years from now, right?
Yeah.
It's the and I'm sure of it, and it's not absolute. Like I can't talk in absolutes, but compared to every other opportunity or place where you could put money, nothing's been outperforming Bitcoin at all as a store
Yeah.
of value. Yeah.
I think the best way to look at this inflation thing is kind of like Jimmy said earlier. If you look at Bitcoin over long term time frames, I like to think of it as like 10 years. If somebody's getting into Bitcoin now, they got to think about 10 years. And Bitcoin is for somebody that's putting say 5% of their net worth in Bitcoin for 10 years. That acts as a hedge against inflation of the money supply. Um, Bitcoin is not a short term hedge against CPI inflation rising. Like what we're seeing right now with CPI inflation rising is kind of like a shock to the system. A lot of people weren't expecting this. A lot of Bitcoiners were. And, a lot of us probably did think that Bitcoin would do better in this environment. But we've got so many negative things happening all at once that's just pushing the price of everything down. And unfortunately, like Jimmy said, because the market participants that are in Bitcoin since 2017 have been more like institutions, high net worth individuals, hedge funds, things like that. Obviously, we've got millions of more regular average people that are buying Bitcoin. They're starting to realize it's a good way to opt out of a corrupt money system, or it's just a way to like um, hedge against their own currency, say in like Nigeria or Lebanon or these countries all around the world where their currencies are way more inflationary than ours. You've got a lot of people that are principled, kind of like anti central bank libertarian. Like you got tons of individuals like that coming into Bitcoin, but since 2017, you'd have a lot of these traditional participants who also have 401ks and RRSPs, and they've got them in index funds, and they've been buying tech stocks, and like they have a portfolio that is traditionally constructed so that when they see everything going down, they just kind of lump Bitcoin as an investment. Like a lot of people came in this last cycle in 2021, and they allocated to Bitcoin, and then they went off onto the risk cliff in crypto, and they started buying DeFi coins and Ethereum, and some people were buying NFTs. Like I've got a lot of high net worth friends, some of them in the SaaS industry, and I was advising them to just buy and hold Bitcoin, think about it for 10 years, don't get caught up in all this crypto stuff because you're an entrepreneur and you're a tech entrepreneur. you're probably going to get like shiny object syndrome. You're like, oh yeah, but the blockchain can do so much more stuff. You're just not thinking about this right. The NFTs is such an innovative concept that's going to be used for identity, and it's going to be used for ticketing. It's going to be used for events. You're just a Bitcoin maxi. I'm like, no, I've been in this freaking space for 10 years. Well, actually 11 years now. I've been through all the ups and downs. I've invested in probably hundreds of different crypto projects. I'm friends with all the founders. I understand what this game is, and the game is just a token. In the end, is a token boiler room, and these bubbles are just ways for pre-mined coins to get dumped on other people that don't understand what they're buying. And there is really no long-term value for DeFi coins and DAO coins and NFTs and anything like that. It's the same as penny stocks. I mean, it's just like all through history, there's these periods of boom bust and FOMO bubbles where people don't understand what they're buying, but it's just they get caught up in the speculative fever of it all, and then they create narratives that they use to justify their investments, so that they don't think of themselves as a speculator. They think of themselves as an adopter of something, like an early technology adopter or a tech investor or whatever. But really, all we've seen is majority of these DeFi coins, crypto joke coins, NFTs, all that stuff. It did well in a bubble. It's down significantly now. And many of us were warning that this was really just a way to have these insiders and venture capitalists that pre-mine these garbage investments, really, to dump on people that are coming in to buy up the FOMO. And that's what happened. All this stuff's down like negative 90 to 99%. A lot of these blue chip projects are down like 99%. And like
Yeah.
blue chip is just Kool-Aid. It's actually separate. What you got to do, I would advise most people, especially people in the SaaS industry that are coming into this space and like buying some Bitcoin and then going out and buying other stuff, separate the technology narratives from the coins, because they are completely separate. I will say that there is some interesting technology that's being built in the DeFi space, but you don't need tokens for any of that stuff. The tokens are all bolted on after the fact. And you got to really start with a foundation of trying to understand why Bitcoin matters, why Bitcoin was invented in the first place. And if you can get yourself to that point where you've got 100 hours of learning about Bitcoin, you listen to like Preston Pish's podcast, you read some, or listen to some audiobooks about Bitcoin specifically, and get yourself down to a really foundational understanding of why Bitcoin is valuable, what makes decentralization such a key component of what makes Bitcoin the asset valuable, and how Bitcoin fits in compared to other asset classes. When you can get yourself to that point where you can clearly in your mind separate Bitcoin from everything else, well, then I'd say it's okay to start going and looking at all the other stuff, because then we won't be drinking the Kool-Aid. Because otherwise, if you just
Yeah.
buy Bitcoin because Michael Saylor has Bitcoin and you want to have some Bitcoin too, or Raoul Pal from Real Vision liked Bitcoin and now he's telling you to go buy Luna Coin or some other fintech innovation or whatever, and you just buy Bitcoin and you're holding that, but you don't know why you're holding it, well, then most likely you're going to go buy some other crap, get wrecked on that, and then sell your Bitcoin because you're like, crypto's not what I thought it was. It's not a hedge against inflation. Because if you just come in
Mhm.
with this surface understanding, which a lot of people did, that, oh, well, Bitcoin is a hedge against inflation, and then you see the CPI inflation numbers rise and Bitcoin goes down, you're like, oh, I guess it's a failed experiment. It's not a hedge against inflation. I better just go buy some bonds, or I better just get back into cash. But yeah, man, just like Bitcoin in the short term is not a hedge against CPI inflation rising, because CPI inflation is kind of a shock to everybody and people are panicking because it coincides with the drop of the stock market and the announcement by the Fed that they're going to start doing quantitative tightening and all this stuff. Bitcoin over the long term is a hedge against monetary inflation. Like the debasement of the monetary supply is what Bitcoin is a long-term hedge against. Because if you hold your
Yeah.
money in dollars over 10 years, we can all guarantee that those, if you have $1 million, say you exited your company and you made 10 million or something like that, and you take that 10 million and you put it in the bank account, you know that your purchasing power in 10 years of $10 million is going to go down. because they're continually increasing the monetary supply. That's what Bitcoin is a hedge against for people. It's a hedge against the devaluation and the debasement of the money supply.
Yeah, very well said. I'm in total 100% in alignment there. A couple of things I want to ask. So why is Elon Musk pumping like Dogecoin? Like, what's that all about? Like, do you have
I,
any
I don't, I
Dogecoin?
don't, I don't, I don't think he's pumping Dogecoin. I think he's trolling.
You
I
think
think
it's
he,
just a big troll, huh?
I mean, he that's what he does on Twitter, right? I mean, he's not pumping Dogecoin at all. If he was serious about it, Tesla would have put it on his balance sheet. They bought Bitcoin.
Yeah,
Uh, and you know, I heard about the potential lawsuit that he's facing right now because of his tweets about Dogecoin. But I'm sure you know he wouldn't be ignorant enough to tweet about Dogecoin while holding a significant position, because then he'd be in really big trouble with the SEC, right? Um, but yeah, I truly, you know, to talk about the tokens, the other tokens, right? I always you know, especially the utility tokens, right? Well, Dogecoin is a clear meme, and the founders of Dogecoin, you know, they're pretty. That's why I like Dogecoin, not as an investment, but because the founders behind Dogecoins was clear that hey, this is a meme. This is not real money. This is dumb. This is just like for fun. Fine, whatever. You want to play around with Dogecoin, play around with Dogecoin because it's for fun. It's not. They're not promising to retire you. You
yeah,
know.
yeah,
Whereas you know a lot of projects, right, the Ethereums and the Cardanos and etc., you know, people tend to use very confusing language when they talk about these other tokens, right? Because you know when you're talking about a utility token, right, when you go and purchase a utility token, you're purchasing that company's product. So like you know Ethereum, you know they produce ETH, right? You need to buy ETH to use their service, right? So you bought the product in order to use their service. And the thing with these products is we're speculating with these products as if they represent equity or a piece of the organization itself. It's weird. The equivalent of that is imagine you believe that ExxonMobil, the gas company, is going to have an amazing quarter, and you go to the gas station and fill up a can of gas, and you presume when their quarterly earnings come out that the can of gas is not worth more money. It's asinine,
yeah,
but that's what we're doing,
yeah,
right? And sort of, you know, utility tokens. If it is truly a utility token, it ought to be able to trend downward in value over time, right? Because you know, as a technology company, you must end up becoming cheaper, right, and more accessible to operate at scale, right?
hmm,
That's just how technology functions, and I see the more that Ethereum is used or Cardano is used, the token goes up in price, becomes less accessible. In fact,
yeah,
when you see what the popular drops that they have, like NFT drops on Ethereum, the technology breaks, can't operate at scale. There
yeah,
are tons of limitations to these. So it's a lot of sort of confusion when we're talking about these tokens, whether buying these tokens mean that you have exposure to the project or whether these projects are actually built to do what they say they're doing. Um,
yeah.
yeah,
So when I say he's pumping Dogecoin, like I'm the type of person where I always like to try and see the best in someone, rather than the other end. I like to see the good in people, and just obviously I don't know Elon Musk, but just seeing what he does and what he's trying to do for I guess humanity, this big vision in like with people and in the environment and in space and all this. Like you would think that he has at least the awareness that if he's trolling, like he's probably screwing a lot of people because they're trusting him for his word and that. Like I bet you a ton of people are buying Dogecoin just because he tweeted about it.
I
I
think
think that he actually is, Jimmy. I think he actually is serious. I think he's just like not thinking clearly about this. It's like there's a bunch of things that catch his attention, and he starts to tweet about it. Like you remember that cave thing? Remember when the boys were stuck in the cave, the Thai boys were stuck in the cave, and he started like developing a submarine to be able to get them out. And then there was this guy that was kind of like criticizing him, and he called him a pedophile, and started like he actually hired a research team, like a private investigator, to go and like try to dig up some shit on this guy, and like see if he had a checkered past. Well, I mean, Elon Musk ended up getting sued for that and for defamation. He lost the suit, as far as I understand, because he, sometimes he can be a total asshole, and it was proven in that scenario that he was just completely egotistical, and it just consumed him. So I think he is autistically consumed by Dogecoin at this point as part of his personality and his ego, and it and it all goes back to the uh the point that, like, in the environment where everything can go up, when there's access to easy money and people's brains are broken, whether it's because it's residual undiagnosed COVID and their brains are swollen, so they're off taking risk when they shouldn't be. Whatever the reason is that in 2021 we decided to value JPEGs as the same price of a home, or a joke coin as like the same value as Bitcoin, or whatever. Whatever the reason is, Elon Musk doesn't think deeply about this, and you can tell by looking at his tweet likes and who he's interacting with on Twitter. He likes tweets that are just totally nonsense about like scaling. Like he's like in like a 2016 level understanding of what Bitcoin is and what cryptocurrency is, because he likes tweets that are just total nonsense. And he says things like, "Yeah, Dogecoin can scale. It's just like Bitcoin, and we'll scale it on Robinhood and Coinbase." And like that totally shows that he has no depth of knowledge of the understanding of why you want to have censorship resistance. If he thinks that you can just increase the block size of Dogecoin by 100 times to allow for more scaling, and then do the rest of the scaling on the exchanges, and then still retain the properties of the Lightning Network scaling Bitcoin, it just shows he doesn't really deeply think about it. And it is more of a joke to him, but it's part of his identity now. It's part of his ego. He's egotistically not going to admit that he was wrong until like he'd get sued, just like in the Thai boy case, where he was like saying this guy was a pedophile, and like right up until the point where he was taken to court about it. So I do think he's serious. I think he's not thinking deeply about it. He's just loving the attention he gets from these Dogecoin people. He still interacts with the co-founder of Dogecoin constantly on Twitter, Billy Two Mac or whatever. And this guy is a total moron. This dude that created Dogecoin is a total moron. Like, he just copy pasted the code. He doesn't understand anything. You look at his tweets about Bitcoin on Twitter. He's just total moron. Doesn't understand what he's doing. It is a big joke, but as this market falls apart, and the central banks start to raise interest rates and all this stuff, you see people will less and less be caring about these nonsense projects and NFTs and stuff like that, because we have this monetary privilege that's starting to erode here in the West. I like to compare, and actually, just the other point about it is, thank God that like Elon's tweets don't matter anymore, because before, when at the very beginning of this bubble, Elon actually tweeting about Dogecoin gave permission. Like, the richest man, one of the most followed people in the world, tweeting about Dogecoin, gave permission to all the other tier one celebrity influencers to go do the same thing. They all started doing it. They started promoting their own coins. They started creating their own coins. They started launching their own NFT scams. And like, to Elon's credit, at least he's critical of NFTs, Web3, DeFi. Like, he always tweets these memes about like, is Web3 in the room with you right now? And like, making fun of NFTs and stuff. So to his point, he hasn't gotten completely into the whole crypto grift. The only thing that he's promoted is Bitcoin and Dogecoin. And Dogecoin, because it was a joke to him, it's funny. He gets a lot of attention from it. But unfortunately, you're right. Like, he has massively influenced a lot of people to like get wrecked and believe the narrative that he's going to actually make Dogecoin the currency of Mars or something like that. And then you get Mark Cuban piling on, like adding more network effects and getting people wrecked. And then, like I said, you get all these other celebrity influencers going down like the line, from Gene Simmons to Logan Paul to like everybody really getting involved and promoting crap to their audiences and
Yeah.
pumping and dumping these crazy coins. And now, 2 years later, a year and a half later, these same people are doing it still, but it does no effect, because the market has already
Right.
gone through its complete bubble and pop. And now these celebrities are just like building up themselves a lot of legal trouble, I think, by still promoting this crap. And, unfortunately, it would have been great if Elon had have learned the lesson from the last year and a half of promoting Dogecoin to people and seeing it go down 95% or whatever it has. But just the other day, again, he tweeted, "I still support Doge. And I'm going to
Yeah,
still support Doge." So, I mean, like, he learned no lessons, but hey, the price of Dogecoin didn't even move. So at least he has no impact
yeah,
anymore.
yeah, yeah. It makes sense. Um, so I feel like most like regular mainstream crypto people in crypto are in like both Bitcoin and Ethereum as like the main like stable coins. Like, do you consider Ethereum as that, or do you consider one of these altcoins that are not going to have any value at the end of the day?
I like Jimmy's answer about like the way that you should really value these alternative coins is based on what they're supposed to do. And like Ethereum keeps changing its narrative. When the ICO happened, it was smart contracts and immutable code and immutability. Um, when the DAO hack happened, they had to kind of roll back the transaction that the attacker, they exploited the DAO contract, which was actually in a system of smart contracts. The DAO hack wasn't really a hack at all. It was actually just an execution of immutable smart contract code. And obviously, they didn't like having 30% of the Ethereum supply being drained from the contract by an adverse actor. So they rolled it back, and then they broke the immutability promise, and then they came up with like minimum. Well, I call it minimum effective decentralization. They don't call it that because they like to come up with other buzzwords, but Ethereum's narrative keeps changing, and like it's like there's the ICO bubble of 2017 caused massive investment from VCs and crypto whales to go into these ICO coins, and the idea was that you were disrupting venture capital, and that the early VCs into supporting all this crap came up with the MV equals PQ ratio and the fat protocol thesis to justify investing in these utility coins. Well, the SEC came out and said, actually, these are illegal securities. And they started taking action against some of these projects. That put a super chill, like it was like an ice chill on the market for Ethereum as this platform to disrupt venture capital, because it was just a bunch of centralized people raising money and using a blockchain instead of using a database, and they were still treated as securities. Well, that saw the price of Ethereum go from 1400 at the high down to like $80. It had a negative 95% absolute routing as people realized that this massive bubble that built up all this value in the ETH project was based off of a flawed analysis that utility coins give the value. And a lot of people became Bitcoin maximalists in that bubble pop. We had people like Michael Saylor, Corey Clipson from Swan Bitcoin, Robert Breedlove. There's so many people that came in and like was like looking at the system. Maybe they participated in the ICO bubble. Maybe they invested in some ICOs. Maybe in the case of Corey from Swan, he was actually running a crypto hedge fund, and he was like seeing all this crap, surveying the landscape, and realized like this is actually trash. This is a bunch of like insider pump and dumps. It's a bunch of nonsense. I'm actually going to go build Bitcoin. Bitcoin is where the real like value is for humanity. So then he created Swan Bitcoin, and now he's one of the biggest network effects for Bitcoin, creating awesome content and hiring tons of people that create Bitcoin education, and really trying to delineate for people what is the difference between Bitcoin and Ethereum and all this other stuff. So we learned all these lessons in that last bubble pop, and then you had all these awesome, like valuable nodes for Bitcoin get minted because they saw all the carnage. They're surveilling the apocalyptic landscape of all these worthless tokens down 99% or to zero. But then the whole thing reinflated with what we described earlier because of the money, the monetary policies. The whole thing reinflated. We forgot all those lessons, and now you got the same situation where ETH pumped to $4,800, and now it's on its way down again to negative 90% because the whole thing pumped this time based on not the ICO narrative, but the DeFi and the NFT narrative. And both of those things turns out were also complete trash. NFTs was just digital beanie babies, and it was a nonsense speculative bubble. And DeFi turned out that that was actually just a bunch of centralized companies that were creating protocols on top of Ethereum to be able to dump bags of pre-mined tokens on you. And really, the utility narratives didn't matter there again. So they had to change the narrative from the utility token thing, because when people actually started building DeFi on Ethereum in 2019, 2020, and it reinflated the speculative fervor of Ethereum, then it actually broke Ethereum, like Jimmy said. The gas fees went insane, and they used to make fun of Bitcoin, saying, "Oh, well, it's absurd that Bitcoin should be more than 25 cents a transaction. The Internet of Money should be no more than 5 cents a transaction." Blah blah blah. And Vitalik said that anything above like a 25 cent transaction is a liveliness failure. And so what happened? Well, Bitcoiners were right. We all said, don't build this stuff on the base layer because it's not scalable, and it's going to ruin decentralization. It's going to ruin the user experience of people trying to use the thing. So Jimmy was absolutely right when he said it becomes like a net negative for the use case of the utility of this thing as a smart contract platform when the fees are so high that you can't even afford to use it. Well, what did they do? They took the stock to flow ratio, which was popularized by Plan B to bring a lot of institutional attention to Bitcoin, using that stock to flow meme, which a lot of us, by the way, thought was nonsense. It was just a meme for rich people, the same way that the Citadel is a meme for like plebs. Like, we're all gonna have a Citadel if you hold Bitcoin. Like that, the stock to flow ratio was the same type of meme, just for rich people and institutions. So that was working for a little while to bring a lot of attention into Bitcoin. So the Ethereum people said, well, we're gonna actually take that stock to flow ratio thing. We're gonna take the high fees of Ethereum, and we're gonna turn that around and market it as if it's a good thing. Change the monetary policy of Ethereum with this EIP 1559 thing, which actually changed the core monetary properties of the network. They changed it so that it would burn the fees, and that was like marketed as if that was the solution to the problem of high fees, because now the high fees are going to be pumpamentals for the Ethereum price. Now the high fees are actually going to pump the price of ETH because it's going to be burnt. And somehow that was marketed as if it was a good thing, because they started with this ultrasound money meme saying that if Bitcoin is sound money, well, now we can fork Ethereum's monetary properties and call it ultrasound money. And really, what they didn't realize was that for people that really do the work and try to understand the difference between Bitcoin and the other stuff, they actually realize that when you can change the monetary properties of the system that easily, it's not actually decentralized. And that's the
Yeah.
core reason why Bitcoin is more valuable than any of these other things, because nobody's going to change the monetary policy. The long-term credible scarcity guarantees of Bitcoin, that's what gives it separation from everything else. And Dogecoin and Ethereum, they're a litmus test. So if people fail that litmus test and they buy Bitcoin and ETH or Bitcoin and Doge, I mean, they just haven't done the work, and they're going to get wrecked.
Yeah, I sort of
Yeah.
want to chime in here on ETH because I don't know, like the subject, like Ethereum just irks me because it's very rare that you have really honest conversations with ETH maxis uh, about that protocol. At the end of the day, we have an organization that like it has to go like they're heading towards their third try. You have ETH Classic, right, which is the original ETH, got hacked. We're currently using their second try, right? Which now they're trying to transition to proof of stake because like this ETH doesn't actually work. It's not scalable. It's too expensive for a lot of people to use, and it breaks if too many people are using it. So now we're heading to their third try. I mean, the staking of our current ETH is really just them burning tokens and giving us a brand new token, right? It's nonsense at the
Mhm.
end of the day. And in regards to NFTs, especially the reason why PFPs got so popular, they're ICOs. They're all like there's a reason why there's a logic behind a lot of the big projects. The difference between one NFT and the artwork and another NFT is so negligible. They just change the color, maybe change a little thing about the NFT, but one from one to another, the difference is negligible. so they could take advantage of the group economics, meaning when crypto punks get popular, it doesn't matter which crypto punk that you buy, just buy a crypto punk because they all look the same. As long as you call it an artwork, you don't have the SEC knocking on your door. It's it.
Yeah.
It's essentially right in the same way that if you buy a project, right, one token is no different from another token. It's the same dynamic. It's the same group of economics, and it all works the same. And so NFTs got popular, especially the PFPs got really popular for that same exact reason. It was a way to do an ICO without the SEC on your back because you called it
Yeah,
art.
so far.
Yeah, I really like how you guys both explained Ethereum and what it's all about. Appreciate that. I'm not sure how open or transparent you both are on like your actual involvement in Bitcoin. Like, for example, do you just buy and hold? Are you involved, invested in companies that use Bitcoin? Do you mine Bitcoin? Like, what are you guys like doing with Bitcoin?
Go ahead, Jimmy.
So yeah, I'm an investor. Also, I spent a lot of time on Clubhouse, either learning about Bitcoin or teaching new investors about not just my experience in regards to what Bitcoin has done for me. Because investing in Bitcoin, it sort of changed like my life in recent so when COVID hit, I have a digital marketing company, and when COVID hit, I lost like a lot of my clients. A lot of my clients were in the music industry, and so concerts weren't happening. That entire industry was basically wiped out. And then I invested in crypto. First, started in DeFi, and then converted all of my gains to Bitcoin after meeting people like Brad, American Hodl, Bitcoin Tina, John Fakuri, and all of these other guys from Bitcoin Clubhouse. Um, and the growth in Bitcoin, making that investment, like put me in a position where I was able to start and acquire a bunch of companies. I bought a couple of businesses down in Kentucky. I have a trucking company here in the Northeast, and through my experience, I educate a lot of other people about what I've gone through thus far, what I've learned from gentlemen like Brad, and etc. I definitely also just a side note. I do have the most successful Bitcoin NFT drop in Bitcoin history.
Really?
Yes, I'm the part of the Rare Pepe project. Yes, I negotiated the first partnership, the fake rares. Ghostface Killer of Wu Tang Clan. I negotiated a deal where he was selling the rights to his music um, as an NFT, partnered up with the fake Rare Paper project, and which was wildly
Wow.
successful. It was the first time the Bitcoin blockchain was slowed down by a bunch of people trying to buy a Bitcoin NFT.
Really? Wow. That's
Yeah,
awesome.
yeah.
That's cool.
So yeah.
Very cool.
So
Yeah,
myself,
Brad. Yeah.
I invest. I'm like a Bitcoin saver. So I save in Bitcoin. Most of my net worth is in Bitcoin, and I educate people. Obviously, like I don't have a super successful podcast. More so, like I go on other people's podcasts and just hang out on Clubhouse all day and learn and talk and think through Bitcoin. 10 years later, 11 years later, I'm still learning about Bitcoin. I I do invest in Bitcoin companies. I've probably got 20 or so Bitcoin companies that I've invested in. Bitcoin only companies. So, people like Village, which is like a Bitcoin for kids app where you can start a trust account and save Bitcoin in your kid's name. Um, all the way to like just things that are technology for Bitcoin, like zero knowledge channels on the Lightning Network, or a lot of education stuff. I invest in companies like in Africa and other countries where they're trying to educate people about Bitcoin. Lightning Network to me is real important. The peer-to-peer cash use case of Bitcoin. That's why I got into Bitcoin in the first place. It was both digital gold and peer-to-peer cash back then, and it still is today. So I do I do dabble quite a bit with crypto and DeFi and all that because I have a lot of friends from the early days that became like fund managers and DeFi founders and things like that. So I mean, a lot of people that got into Bitcoin in the early days, they were entrepreneurs that saw Bitcoin as a, digital gold. And then, they're still entrepreneurs. They think, oh, blockchain technology looks like I can build a derivatives exchange on the blockchain. So I'm going to go do that. You can't do that on Bitcoin yet. So I'm going to go do that and make my own blockchain. I mean, so I have tons of people that kind of like were part of the ICO bubble. So I still keep in contact with them. That's why I know so much about all the other chains and, you know, the use cases and stuff. And I actually worked for Alphabet in 2017, 18, not Alphabet, the Google company, but Alphabet. It was a big crypto hedge fund. And I was on the investment committee doing some Bitcoin stuff for them. And then I joined their ICO committee, and like I helped them do due diligence on like 70 ICOs in the last bubble. And like that's kind of where I saw the sausage getting made and realized the kind of like backroom insider deals and how everybody's just doing it to pump and dump their tokens and shit. I just realized like, oh, this is just Wall Street, but they're doing it on a blockchain. It's Wolf of Block Street, whatever you want to say. So in Bitcoin now, like that's why I'm a Bitcoin only guy, like Bitcoin in the streets, shitcoins in the sheets. So like I'll go and like mess around with the shitcoin stuff,
I
with the
like that.
NFT stuff. I invest in companies, like I'm a part owner of NFT.com because I like to stay
Mm.
plugged into this stuff. And if I ever make any profits off of any of this crypto bubble nonsense, then I take it back and I invest it in Bitcoin companies, because there's not enough capital allocation going to Bitcoiners trying to build Bitcoin businesses, because it's not as much FOMO, because you don't have like A16Z in there pumping the bags of all these projects. So I do my best to try to create some FOMO in Bitcoin. And yeah, like Jimmy said, I was collecting rare Pepes on Bitcoin back in like 2016 or whatever, because all this stuff came from Bitcoin. Like the Tether stablecoin, that was on Bitcoin first. The NFTs created by Bitcoiners on Bitcoin on a counterparty. All this stuff has been done. The first decentralized exchange, the first DEX, it was counterparty on Bitcoin. So, I mean, like Bitcoin has these use cases, but we all realized early on that you don't want to build this stuff on the base layer of the blockchain. And it may sound like, because I'm so critical of Ethereum and DeFi and certain crypto stuff, that I don't think any of that stuff's valuable at all. But that's why I keep saying, like, separate the technology from the coins, because I do think that NFTs are here to stay. I think that the concept of digital collectibles, game items, digital art, that's here to stay. That's like a Pandora's box thing. You can't put that back in the box. It's going to be done. Everybody's going to have NFTs. There's going to be trillions of NFTs. But the fact that, like, because of this crazy bubble that we saw, and people like Gary Vee and Logan Paul and all these influencers coming in and shilling them, and because of the ETH whales driving the auction prices up to these astronomical levels, and going and working with Christie's and stuff to get all this attention for marketing for the Ethereum NFT bubble, it created this situation where I almost want to be against NFTs, and where all Bitcoiners are like against NFTs, because it created this thing where it was like nonsense. It was just like the dumbest bubble that humans have ever speculated on, probably worse than tulip bulbs. You're actually speculating on JPEGs. So they created these conditions where it like made it tough to want to actually support the concept of NFTs, because they made it net negative. Like look at how badly the normies react to like a game company adding NFTs. You get like 500,000 people like complaining about it on Twitter and YouTube when like a big company announces they want to do NFTs in their video games. So I mean, unfortunately, there's been a lot of damage done to the concept of digital items because of the speculative like greed filled bubble that was exploiting all the communities and users. And it's going to take a little while for that to get repaired, but regardless, I don't think Ethereum's going to zero. I don't think the Ethereum network is shutting down or anything like that. I think people are going to continue to use this stuff. I just think as the market figures out what the ETH token is, and that it's actually an inferior version of BTC, and it's actually supposed to be used as a utility coin for the network. And as the market figures that out, as Bitcoin outperforms over the next decade, Bitcoin can become a global reserve asset worth $20 trillion in the next decade. You see $1 million Bitcoin, that's a 20 trillion market cap, because Bitcoin does have the long-term credible scarcity. It's more decentralized. It has the Lindy effect for the asset itself. And you don't need to have, a lot of people like justify their investment thesis of Ethereum and Cardano and Solana and all this stuff by saying like, oh, well, Bitcoin's boring. It can't do anything other than money. Money's like the biggest use case on the planet. Like all it has to do is money. All the other stuff is bonus. The other stuff is bonus,
Mhm.
and I'm investing in a lot of entrepreneurs building other stuff. There's Bitcoin DeFi, Bitcoin NFTs, Bitcoin lending. There's all kinds of stuff happening in Bitcoin, but the key difference is there's nobody doing tokens. The tokens are the problem, and that's why I'm like super excited by Jack Dorsey's company Square. Well, I guess they rebranded to what Blocks, and
Block,
they've got
yeah.
Spiral, which is the formerly Square Crypto. They got the TB Dex company. So they have the Square merchants and the Cash App, which have tens of millions of customers all over the world and merchants. And they're building on the Lightning Network. They're building decentralized identity, decentralized web nodes. So, you hear all about this stuff about Web3 and like, Ethereum can do DAOs and Bitcoin can't do all this stuff. It's nonsense. You just don't hear about it as much because there's nobody out there shilling the token armies, shilling the coins for all this stuff. But Bitcoiners are building it. There's a significant investment going into like what Jack Dorsey and them are calling Web 5, I think is a joke, but it's the decentralized web. Like Web 3 is
Mhm.
not the evolution of the internet. Web 3 is just a new marketing scheme for pre-mined tokens that Andreessen Horowitz wants to dump on your head. Web 5 is what Jack Dorsey and all these other principal Bitcoiners are doing. It's like you don't need a blockchain to do a decentralized social networking application. You just need to have peer to peer networking, peer to peer communication, webs of trust, decentralized web nodes. And then you can do it with the Bitcoin Lightning Network integrated into all that stuff. You basically have the evolution of the internet where it is more peer to peer, it is more decentralized, and sats are the only currency that you really need. And if you want to throw stable coins on there until we get to hyper Bitcoinization, you can do that. And people are going to have NFTs in this Web 5 stuff. People are going to do their own coins, I'm sure. But the thing about Bitcoiners building this stuff is that we're never going to be trying to promote these tokens and pump them to these asinine valuations because we're all about like Bitcoin as the money. And that's
Yeah.
really all we focus on. Like the other stuff is kind of just having fun, messing around. There is some valid use case of like artists being able to monetize their audience on a blockchain. Sure. But like when you do like, Crypto Punks and Bored Ape Yacht Club stuff, which is just like clip art securities, like ICOs basically, like Jimmy was saying, that's not what this is. This It's not useful for the world. It's not helpful. It's actually just
Yeah.
a big distraction. And I'm just pumped for 2025 because even though like we're in a bear market right now, more and more people are starting to understand like Bitcoin is valuable, Bitcoin is important. And I do think that over the next year or so, as you see the rest of the macro market conditions continue to get worse, like this war in Ukraine and Russia doesn't seem like it's going to be stopping anytime soon. It's a big problem for energy prices. If you've been following like what's going on with China and what's going on globally with the food supply shortages and the supply chain disruptions, it's going to be a rough summer and a rough fall for people all over the world. There's a massive shortage of meat and grains, and there's a serial arsonist at large in the United States. 100 food plants and meat plants are burning down. Like, there's so many inflationary pressures on the horizon, and we've got a condition with the housing market here in Canada and all over the world too, where 70% of the people that don't own homes feel disillusioned, like they'll never be able to own a home again. That's the kind of conditions that you don't want to have as a person in charge because that leads to a populist uprising. Like they're going to grab their pitchforks. If people
Yeah.
get disillusioned enough in the currency and in the lifestyle of living in the country, you see what's happening in Sri Lanka. They're burning down houses of politicians. This that's not It's not immune to us in the West. So we're continually losing our monetary privilege here. For the last 10 years, we've had monetary privilege in the West. So people are like, just focusing on their lives, that money pretty much worked for us for the last 10 years. So the early adopters of Bitcoin saw the benefit of like hedging against the devaluation of the currency because they were paying attention. But everybody else was just like, yeah, money's fine. Like, I'm just saving money. But now we're starting to see, like, we're starting to experience what billions of people all over the world have been experiencing for the last 50 years, which is high inflation, extreme devaluation, lots of like supply chain shortages. Like, it's not going to be so groovy here. And the last thing I'll say on this point is, as we continue in that paradigm of losing our monetary privilege and people start to worry a little bit more about things they should be worried about, like food sovereignty and just taking care of themselves, and they're working hard and long-term thinking rather than just like, oh, what's on Netflix and I'm going to go buy a JPEG or flip a sneaker. Like, you look at Nigeria for I look at Nigeria for sentiment, Google search traffic, places like Nigeria, El Salvador, Lebanon, and you search, like, if you go to the Google search and you plug in Bitcoin, Dogecoin, NFTs, crypto, GameStop, right? You look at things that over here where we have monetary privilege, you look at things that like spike up and cause massive, FOMO, like GameStop, Dogecoin, whatever. In Nigeria for the last 5 years, it's just been a steady, slow uptick of Bitcoin. This crypto, Dogecoin, NFTs, it barely blips. Where here it's like massive spikes and FOMO of interest because people have this monetary privilege here. But in a place like Nigeria, there's 200 million people and they actually need Bitcoin because they don't have the monetary privilege to be able to go and speculate on NFTs. Like, they need to protect their value, and Bitcoin to them is a useful, like, important tool. So I think we're going to see more and more of that. I don't think crypto's dying. I think crypto is just going to turn into like venture capital. It's just going to be like a tech, a different type of technology for venture capital, financial products and stuff like that. But Bitcoin can be 20 trillion market cap as a global reserve asset, $1 million a coin, and Ethereum can be $500. So, I mean, Ethereum can still have, like, there can still be a $250,000,000,000 worth of notional value settled on layer one blockchains like Solana and Ethereum and stuff like that. Like, they can have a total addressable market of $250,000,000, which is all the derivatives markets in the world, right? If that all gets put on these layer one blockchains, that does not mean that the price of these coins are going to shoot up along with the values of the valuation of the things that are getting settled on there. So you could see like US treasuries get settled on an Ethereum layer 2 or something like that, and that doesn't mean Ethereum's going to $10,000. Bitcoin, in a
Right.
world where Bitcoin exists, people will come to realize that like Bitcoin is a superior monetary asset, and it's not like the Nasdaq stock is worth quadrillion or a billion or hundreds of billions of dollars just
Yeah.
because all of the stocks trade on the Nasdaq. So I think that people will figure that out as time goes by, and I don't know if crypto becomes a 1 to 2 to 5 trillion dollar market cap. I could see that happening, but in that world, like, Bitcoin's a 20 trillion market cap. So I just say people should be prepared to see $1 million Bitcoin, $500 Ethereum.
All right, I'm totally with that. I think we're living through kind of like an economic shift in the world, similar to other shifts throughout history, and I see Bitcoin as that thing that's going to be there. And going back though, I want to from the Canadian perspective. You're in Canada, as am I. I noticed on your Twitter profile you have a few companies that you're invested in. Um, any particular companies that you want to quickly talk about to for the average person to drive adoption, get people more interested, invested, buying Bitcoin, like any companies that can maybe help with that,
In Canada,
or yeah, in general, I guess.
well, there is one that I'm pretty excited about that's gonna be coming out this year. It's called Peach, and it's gonna be like basically Tinder for Bitcoin. So it's gonna
Hmm.
be like peer-to-peer Bitcoin trading. So in the early days, we had local Bitcoins, and everybody was using that to find local people that would just be able to get you into Bitcoin. But we don't have the version of that for the modern like smartphone and average person that's used to doing like consumer apps. So I mean, that I think is going to be awesome. Anything that's like literally in Nigeria, they have these like peer-to-peer sort of like meets and all this stuff. It's the network, the peer-to-peer network strength in these other countries is way better than here. Here we like to all use
Yeah.
exchanges. So I like to invest in anything that's uh, strengthening the peer-to-peer stuff, because that actually is like the local networks and like the resiliency to the resiliency against like a blanket ban of Bitcoin. Because in these countries where they actually banned Bitcoin, or they take a real adversarial stance to Bitcoin, Bitcoin doesn't die; it just dries underground. and people develop
Yeah.
peer-to-peer networks and WhatsApp groups and stuff like that. So I'm interested in that. Also, ShakePay is doing a real good job in Canada of sponsoring meetups. I'm trying to encourage the founder of ShakePay to get rid of ETH, because that's really hard for me to recommend people use ShakePay when they have ETH on there. The founder is a Bitcoin maximalist or whatever, but like he's just like, we don't want to cause problems for users. We want to take ETH off, but we don't want to cause tax problems or whatever by forcing users to sell. So whatever. They're trying to figure out a way to be able to remove ETH from that, because eventually Cash App's coming to Canada, and Cash App is doing amazing work in Canada, or in the United States, and in Africa. And I'm super bullish. India, Africa, Latin America, like all these places that have this super strengthening Bitcoin network effects. That's what's going to be the most impactful for Bitcoin, I think. And some people disagree with me that, we need more billionaires in. And like the billionaires and the like sovereign wealth funds, those are the people that are going to actually drive Bitcoin to $1 million a Bitcoin. I don't like that. I want to see all the like global poor get Bitcoin before the 1% or the 0.1%. So I'm investing in all these use cases and educators and stuff, that try to help strengthen the network effects of education to get the global poor into Bitcoin. Even if they got like a freaking $100 worth of Bitcoin on their app, that's
Yeah.
we get like a billion people that like want to save in Bitcoin, even 150 to $100. I'd much rather see that happen. That helps the Gini coefficient of Bitcoin become stronger than the
Yeah.
US dollar.
For sure.
And then
Yeah.
Geyser Fund is another one I really love. So Geyser.fund, it's a way to raise money for your Bitcoin project. So if you're going to create a Bitcoin music album, or if you're going to make a Bitcoin book, or if you got a Bitcoin podcast, or even if you're not even in Bitcoin, if you just want to raise money, it's basically Kickstarter for the globe, because Kickstarter has a whole bunch of restrictions of different places where you can't use it. And with Bitcoin, it unlocks crowdfunding globally. So Geyser Fund, I'm super pumped about. It's helping Bitcoin culture, helping support Bitcoiners that are doing cool shit. So I mean, there's tons of projects, but those are the ones that I'm super interested in: education, peer-to-peer networks, and fundraising for like supporting Bitcoin culture and the use case of Bitcoin as peer-to-peer cash.
Yeah, I want to ask about a couple of things there. So, actually, first, from the Canadian perspective, how are you dealing with the tax component of it all? Like, for those who might not know, in Canada,
Yeah.
Bitcoin is still treated like a commodity. So every transaction or withdrawal to fiat is considered either a capital gain or loss, depending on your cost base. So, like, what are you doing with that
So
perspective? Like, how are you treating that?
this is the best advice for people in Canada for tax is hold Bitcoin as a long-term investment, and then you qualify for capital gains tax, which is like 23.5% or something like that. So if you're trying to become a crypto trader and like trade Bitcoin and like be an active trader, I mean, there's a likelihood chance that you're going to be classified as that's income. So you don't want to kind of mess up your cap gains rate, because obviously you want to have low taxes on, you want to be able to look at it as like capital gains taxes. So think that's why the best advice that I give everybody is hold Bitcoin as a savings account, be a Bitcoin saver, just continually buy, dollar cost average your way in and hold it for a long-term time frame. And then, you can look at that as your retirement account, because we're probably not going to have CCP or whatever when we get to retirement age, the way things are going. So look at Bitcoin as your retirement account, and then don't try to get cute with it. Don't try to become a crypto trader. But if you do, you should kind of like consult an accountant beforehand, because you don't want to mess up your personal tax treatment of Bitcoin as long-term capital gains by, doing a bunch of shitcoin trading, and then like, not under a company. If you do some trading under a company, you just separate your personal tax profile from your trading profile. So like I have a company that I will do some like investing of altcoin stuff in, and then I've that happens in the company. So that's how a couple of my friends in Canada do it. They kind of have like, they treat it like a business, and then if they have any profits, they just pay business income tax through the company. Um, and just get an accountant to help you out with that,
Yeah,
because but I would just say don't even bother with that. Like the best thing is just to just buy and hold long-term
just buy
Bitcoin,
and all. Yeah,
and then it's
yeah,
and then it's uh and then it's just income, it's just a capital gains
yeah.
tax.
Yeah, for sure. I'd love to hear both of your thoughts on what you touched on it, Brad, like just the regulation side of it, and the whole idea that um, governments and regulatory bodies view Bitcoin as this direct threat to their own monetary system, and just doing things to combat it and stop its penetration and all that. So, how serious of a threat is that to Bitcoin, and like how do you see that playing out?
I'd like to address something that you mentioned. I think, Brad, I think you spoke about Nigeria. So the thing about Nigeria, especially in regards to peer to peer, I lived there for about 2.5, 3 years. I had a company based out of Lagos. I was on the island, Lagos Island, and peer to peer makes so much sense there because the only way that you can access US dollar with really good rates was basically a money exchanger that operates in the street. They would have like a big wad of US dollars and a big wad of naira, and you come up with your naira and you get your US dollars straight from him, and you get the black market rate, which is way better than the rate that you would get at the banks. And the bank's rate are artificially sort of manipulated by the politicians. And so the way Nigeria works, which I think it works like that around in a lot of these kind of environments, these corrupt environments, is to officially get something is expensive so that they can control the black market. It's essentially how they pay themselves. So I think on the back end, in environments like Nigeria, Nigerian politicians ban Bitcoin so that they can make money off of Bitcoin.
Mm,
Right? So like they'd have to be the guys that'll get you your stable coins, which is also big. It's a Stable coins are a huge business, and Bitcoin is a huge business. Uh, and the guys on the street can't access it in volume. And when I say volume, they're doing volume over there. The average Nigerian can't access that. This is a very powerful and wealthy people in Nigeria that are actually bringing it and then reselling it to seller the people who then sell it on the streets. I
mhm.
can imagine that's happening in India as well, right? And so I think there's something to really consider when you're talking about those kind of environments. Now, in regards to Western nations, I think almost every gray-haired politician in Western nations are way too arrogant to see Bitcoin coming. They still think we're a joke, and I think it's the best thing that could ever happen for us because if they took Bitcoin seriously, we'd be dead in the water, right? And they sort of still need to look at us as if we're a joke, right? Bitcoin maxis or people that are adopting Bitcoiners, they sort of need to believe that we're not a threat, right? For us to uh, continue to grow as fast as we're growing, to the point where too many of their voters are. When you get to the point where too many voters have exposure to Bitcoin, and now there's nothing they can do about it. If you're anti-Bitcoin, you'll never win an election. That's where we want to be, right? And so, like you can speak to any boomer about Bitcoin. I do it sometimes at a dive bar. I have these conversations. They think I'm an idiot, and that's a good thing. That's a good thing. So that's my position on
So I think that that when you said like we'd be dead in the water if they actually paid attention to that, I think that could scare a lot of people in the sense that the capability is there for them to shut it all down. Is that what you mean?
So I want to contextualize that. There was a year where we would be. I think 2015, right? 2016, they could make life extremely difficult if you wanted to actually buy Bitcoin. Um, I think now it's just too many. There are too many players that are actually like influential. Like so, with Tesla now buying Bitcoin, putting it on its balance sheet, with a lot of family offices, right, buying Bitcoin. Um, there are people that are also political donors that have exposure to Bitcoin that like you couldn't really easily legislate against Bitcoin without it costing you politically. It
Hmm.
depends on what state. New York, because of our banking lobby, like that's why New York is always legislating against Bitcoin because every bank is based here. right? Like it's the and so it makes sense. The banking lobby is so huge here. But you go to Wyoming, it's pretty chill. Miami, pretty open to it, right? There are
Yeah.
places in America where they're pretty. Texas, it's pretty open to Bitcoin, and I think the more Bitcoin adoption happens in those kind of environments, the more it's not politically advantageous to legislate
Yeah.
against it. So
Makes
yeah.
sense. Yeah. Brad, I'd love to hear your thoughts on that.
Yeah, I mean, like, there's more and more Bitcoiners getting involved in politics now. There's the Bitcoin Policy
Hmm.
Institute, Bitcoin Today Coalition, Bitcoin Advocacy Group. Those are all in the U.S. that it's like Bitcoiners getting together and trying to make an impact in, a multi-partisan, bipartisan way to try to prevent it from being politicized and to sort of prevent the ESG left from trying to rage against proof of work and ban Bitcoin or whatever. So there's lots of network effects there. It's been great. We've seen over the last year, like Cynthia Loomis and Ted Cruz and um, uh, I can't remember who else, but there's like been some on the left as well. Like politicians sort of embrace Bitcoin, so Bitcoiners are competing there, which is good. We're getting influence, and as long as you have like Texas becoming like this bastion for Bitcoin freedom, I don't think you're going to see a lot of sweeping bans of Bitcoin. Um, it is interesting now to see, like, I couldn't have imagined 10 years ago when I got into Bitcoin in 2011, like seeing politicians like Ted Cruz making Bitcoin like their talking point, and like the Heritage Foundation recently coming out and endorsing Bitcoin. Like, that's massive for the United States. Like, that's a really strong network effect for Bitcoin to have this like place in the idea of freedom in America, to have the Heritage Foundation and these influential folks being like pulling pulling the strings, or having us pull the strings and then get the political system to be engaged in Bitcoin. It's wild to see this is where we are. And in Canada, even to see Pierre Poilievre being so open about Bitcoin and like taking it on the shoulder for Bitcoin because the price is dropping. He still hasn't like come out and said anything negative about Bitcoin. He owns Bitcoin. He's been learning about Bitcoin. And in Canada, we're trying to do some similar things here. Like, we're trying to set up a coalition of Bitcoiners to do a multi-partisan education thing for senators and MPs, and um, try to get Bitcoin logic and Bitcoin information out there. So we're trying to follow in the footsteps of the Americans here and try to go out in front and get politicians thinking about Bitcoin in a way that's future forward. And we have more energy that goes over the dam in Quebec than Bitcoin uses to power the whole network. So
Hmm.
in Canada, we could power the entire Bitcoin network renewable in a renewable way, but for some stupid reason they just let the power go and they don't even use it. So I mean, there's lots of efforts that we can try to help miners or oil producers in Alberta, say, like, do the natural gas flare gas mining. Instead of having methane just get vented out into the atmosphere, we could be setting up these Bitcoin rigs. And yeah, we have lots of energy here in Canada. The United States has tons of energy, and
Yeah.
there's a real battle for proof of work versus proof of stake right now, and this is going to be the current. It is the current battle. It's just not as out in your face, but as we go on, it's going to be more and more obvious that there is a battle for proof of work right now. And if you believe what most of us believe, that Bitcoin is actually useful for humanity, instead of it just being like, oh, a great investment, a great store of value, a great savings account, a savings vehicle, it actually can bring more freedom to the world. And there's billions of people in the world that live under financial oppression and capital controls, and they need Bitcoin. So it is worth it. I think it's one of the most important humanitarian like technologies. There's so many things that you could put your weight behind as an investor or say a philanthropist or whatever. but Bitcoin combines both. Like you by supporting Bitcoin mining, by supporting renewable mining or whatever, you're actually doing something productive for yourself and for the world. So it's like the first time that I've felt like I gotten behind a movement that actually is productive for myself and the world. Most things that
Yeah.
you get involved with, it just bothers you. Like if you get involved with movements that you really cannot, like political movements, man, it's been just so much pain, like getting involved in these different movements through my life and not being able to really make an effect or see anything change has sucked. But like Bitcoin has been a great movement to be part of because we're winning. Like over the years, not only are we changing the world here, but I'm benefiting financially from it. And I'm also like I'm scratching that itch of philanthropy in a way, because I really do believe that Bitcoin is one of the most important causes that we can support. So
Yeah, I'm behind you on that one for sure. And I think, like you both mentioned, there's definitely a lot of change happening, a lot of optimism around, politicians and people supporting Bitcoin. Brad, you mentioned like coalitions in Canada trying to, educate senators and MPs and that. Are you involved in anything specific, or is
yeah,
this
there's
just
this
like a thought?
no, yeah, there's this group that we're getting set up. There's sort of three organizations that I'm helping to organize, and we've got folks across the aisle here in Canada that are all into Bitcoin and all believe the same things. Like I've got somebody that works directly for Justin Trudeau. He wrote his master's thesis in Ottawa about the Lightning Network and why cryptocurrency was
Nice.
all a distraction, and the Lightning Network is actually it was like this 40-page thesis that he wrote, this young guy, and now he works directly for Justin Trudeau. So I mean, there's we
Hmm.
got him, then we've got this other Bitcoin guy that's um, Scott Wolf. He's like a kind of progressive social justice guy. He worked with the NDP and the Liberals with you know charities around community health centers and financial inclusion,
Yeah.
things like that. So it really is a multi-partisan thing. We've also got folks like Pierre Polyev that are interested from the conservative side about using Bitcoin as a freedom technology, and it is multi-partisan. We've got multiple things on the go. We're going to be setting up the nonprofits. I mean, actually, maybe one of them is set up already. I haven't checked in a couple of days, but yeah, we're making a push to try to get more Bitcoin education out there, because a lot of the news organizations here in Canada are funded by the Liberal government, and they have this massive bias against Bitcoin because Pierre Polyev is supportive of Bitcoin. So they say a lot of stupid stuff like Bitcoin is a Ponzi, and if you had to listen to
Yeah.
Pierre Polyev, you'd be financially ruined, and like they're
Yeah.
just super ignorant. They mix up crypto with Bitcoin. They quote Warren Buffett when they're talking about Bitcoin, like Bitcoin is rat poison, rather than talking to like
Yeah.
Canadians like Jeff Booth, who've written so many brilliant things about Bitcoin and in a progressive light presents Bitcoin as the only alternative for like combining like a UBI type system with Bitcoin to transition us to a sound money system that actually helps the lower class and helps solve wealth inequality, things like that. Rather than engaging, they're just reacting politically. So we got a lot of work to do. We got to go educate journalists. We do have a lot of work to do. So I'm trying my
Yeah.
best there, but I'm distracted by price drops and hanging out in Clubhouse all the time with Jimmy and the guys and
Yeah,
investing in all these Bitcoin companies. So we're trying to hire
for
somebody that
sure.
will kind of like take over my role there and get this push forward more, because I'm so distracted now by just educating people about Bitcoin that it's tough for me to want to
Yeah,
engage
no.
with politics because it sucks.
Yeah, for sure. Yeah, no, I hear you on that, and I think it's very important for sure. And maybe we can talk offline. But if there's anything I could do to assist in that, be more than happy to chat for sure.
Definitely.
Um, I have a couple of last questions. I can't believe we're already at the time here. I feel we can keep going, but I have to unfortunately pick up the kids in a bit. But I have a couple more questions if you guys don't mind. So and it's sort of like a two-part question. So I think it's a good way to sort of sum it all up. So first of all, how do you justify the just the volatility component of the Bitcoin? And that's sort of the narrative on the other side. It's so volatile. And so do you see it being stable at some point? And sort of what has to occur in the world for Bitcoin to be adopted and trusted as this, form of currency and trusted, payment system?
Uh, can I go first?
Yeah.
Let's say. I always tell the story. One of the wealthiest people in human history. It was a West African from the Mali Empire. His name was Mansa Musa. And at the time, the Mali Empire had the largest gold deposits on the planet. I mean, at least to Europeans who have already adopted, Europeans and Middle Easterners who have already adopted gold as money, right? And it was still really early on. Not every single market um, within global trade sort of transacted with gold at the time. People were still using salt. That's where the word salary comes from. People
Mm.
were using salt and other commodities to trade, but gold was going through price discovery. And Mansa Musa was Muslim, and he was going to Mecca, right? So he was going to Mecca, and on his way to Mecca, he donated so much gold that he single-handedly crashed the value of gold by himself,
Hmm.
during his Hajj. Because when that an asset is going through price discovery, it does experience that kind of volatility. Once it's mass adopted, it stabilizes, right? And I always say that tell that story, and you can look it up. It's an interesting story. I always juxtapose that story with Bitcoin. That Bitcoin is really early on. A sizable community has adopted Bitcoin, but it's not a large enough community to stabilize the asset. So, but the upside is, if you buy Bitcoin now, you're buying it for really cheap because when it is essentially stabilizes, right, it'll be worth a lot of money. But it's going through the price discovery process, and for that reason, it's still volatile. It's a baby asset.
Makes sense. I got to check that story for sure, but it's very relevant.
Yeah, that's a great story. And it is relevant to like the parallels that we're at right now. I think like Michael Saylor said it really well too when he said you can have vitality through volatility or stagnation through stability. So it appears like
Mm.
the dollar is stable, but really, that's a stagnant thing for your net worth. If you're just saving in dollars, you're actually stagnant because you're not only like, potentially exposed to upside value and protecting your savings, but you're guaranteed to lose purchasing power over the long term through dollars. So, the volatility thing I think is kind of like it's a feature in a way. It does suck to see your net worth drop. So, I mean, somebody like me whose majority of my net worth is Bitcoin, yeah, I mean, that's a lot different advice than somebody who's just hedging against the devaluation in the money supply by having like a 5% slice of their net worth in Bitcoin. For most people, they're not going to be like so convicted on Bitcoin that they're going to go like put the majority of their net worth in it. So for most people, I think the volatility is fine. I mean, as long as you preface like, hey, you're going to see 50% drops guaranteed in Bitcoin. Like for the next 10 years, I don't think there's anything that's going to happen aside from mass adoption and eventually Bitcoin settling in as a global reserve asset, just like the US Treasury, to get you to the point where Bitcoin won't be volatile. Um, Even something as big as like Facebook, you could see recently, is extremely volatile. So something that's in the trillions of market cap is still super volatile in a system where the dollar itself is on this quicksand foundation. And we measure things in dollars, but dollars are a shitty measuring stick because there's no guarantees about how much there is and what's going to happen with that dollar supply. So we see these crazy volatile ups and downs in different markets based on what's going on with quantitative easing or quantitative tightening or the sanctions of a whole sovereign nation. I mean, the sanctions that the Russian sanctions were pretty much a nuclear bomb that got dropped on the global economy, and were guaranteed to sort of like shockwave all markets, because this is a new paradigm we're entering in here where the US dollar has been the global reserve currency for 50 years plus, ever since Bretton Woods in the 1940s. And the Bretton Woods Agreement was when all the all the countries that were engulfed in war on the Allied side, anyways, got together and kind of agreed to use the U.S. dollar as the global trade settlement currency because the U.S. had the most gold, and the idea was to peg the U.S. dollar to like $35 an ounce of gold, and I think that was the price. And everybody would just use the US dollar for trade. So no longer would these countries be competing with each other. We're going to enter this period of competition, or free market competition with like producing things inside of the country and like in the free market, but not in, we're going to take over your factories and we're going to like blockade your shipping lanes. And the America basically provided security guarantees for the world and access to their currency, which was extremely stable because they had all the gold. After the war, like all of Europe basically sent the gold to the United States, and the economy in the United States was the most strongest at the time. I think it was like 75% of the world's gold had been sent to the United States. So made sense for everybody to get together and use the US dollar for trade. And then the US Navy was going to like secure all the shipping lanes, and everybody would not have to worry anymore about war with each other. They would just compete in the free market and then access the United States um, to be able to sell into. Well, that worked until the 1970s. And then in 71, the US went off the gold standard. And that was pretty much the end of Bretton Woods. Well, not officially, but like it pretty much was the end. And then we entered this new paradigm for the last 50 years of they can just print as much as they want and the money supply just keeps going up, and all countries sort of competed with each other to devalue their currencies against each other, because when you can devalue your currency by inflating the supply of your money, it makes your debt burden less onerous because your dollars are kind of like worth less. So your debt, your not your dollars, your fiat currency, your currency of your country, and it's more likely that somebody will buy your goods because they're cheaper in their currency. So we've had 50 years of pretty much countries, in at least the last 20 years, countries are basically in currency wars with each other, trying to devalue their currency without destroying their currency to make themselves more attractive. And in that paradigm, like, who's suffered? Well, the savers have suffered. All the people that have saved in their currency, we're told to pay off our debts and save your money. That's an old, antiquated, like 1940s piece of advice, like pay off your debts and save your money. Because money in the current system, money is debt. Like, there is no fractional reserve banking. There is no base asset of money that gets put into the system to create more money. It's all banks creating money from nothing. Money is credit, money is debt. And of course, when your measuring stick is just debt and ever inflating supply of money, the markets are proving that it's extremely volatile. So I I look back at this book about what happened in Germany during hyperinflation, called "When Money Dies," and we could see in that book, "When Money Dies," the parallels between then and now are just staggering, because there was extreme volatility in forex currencies, extreme volatility in the prices of commodities. Um, Obviously everybody knows the stories about like dragging around wheelbarrows full of cash to go buy bread and things like that. But what not many people know about is that the period leading up to the hyperinflation crisis, most of the population were actually speculators. Like 10% of the population had quit their jobs because they were making more money speculating on forex currencies and buying like supplies from farmers and just sitting on it and flipping it. Like that before the currency died completely, there was extreme volatility in the markets causing people to go become speculators. Well, what have we seen over the last year and a half, 2 years? I mean, there was a survey that I think CNBC or Bloomberg did recently, about 6-8 months ago, was did you or anybody you know quit your job to work full-time trading cryptocurrencies? And like 10% of, I think it was 8 to 10% of people either did themselves or knew somebody that had been making more money trading cryptocurrencies and buying speculative investments than they were working.
Yeah.
So this is just, the volatility is a symptom of dying money. And unfortunately, it doesn't appear like at any point soon there's going to be a reduction in volatility, because it's going to be volatile to the upside and then it's going to be volatile to the downside. But if you look at it over long-term time frames, as long as they continue the status quo, which it seems like they're going to try their best to do, which is continually increase the money supply and continue this credit-based money system where banks just issue money from nothing and they target inflation because they believe that inflation is what we need as an economy, well, it's just going to be, prices are going to keep going up. There may be volatility and like prices may come down in a recession or whatever, but based on all the things happening in the world, it doesn't seem like there's going to be any prices coming down in anything like energy and food and things like that. So Bitcoin, I think, just like in Weimar Germany during hyperinflation, the price of gold was going wildly up and down over this year and a half, 2 years period, 200-300% swings from top to bottom. Like when you have a scarce resource like Bitcoin or gold, I mean, it just makes sense to allocate to it. If you can have
Yeah.
something that is scarce and provably scarce, incredibly scarce, more and more people are going to understand that that is valuable, and that the dollar, if it's just going to be continually inflated away, like the money supply is going to continually increase, people will come to the realization that that's not something you want to save in. And yeah, it will be volatile. Like Jimmy said, we're on the path of bootstrapping this thing into a global currency, and it will be volatile. But over the next 10 years, that's why I think the best advice is like, don't think about it like you're going to watch the price of Bitcoin. If you're going to put 5% of your net worth into Bitcoin as a hedge against the debasement of the money supply, just keep saving. Don't think about it like, oh, well, I should time the top and sell it, because the next 10 years could be extremely volatile. And you don't want to like trade yourself out of Bitcoin. You just want to think about it as like a long-term savings vehicle. Now, if you're like majority of your net worth in Bitcoin like me, I mean, maybe you'd want to try to like maneuver the tops and bottoms over the years to try to like protect your purchasing power and buy more Bitcoin or whatever. But even that's risky. And I try my best not to do that. I try to sit on my hands, because if I had just bought Bitcoin in 2011 and just sat on my hands until now, I'd be in so much of a better position than me. What I did was trying to get smart with it. I sold half my Bitcoin at $30 because I put it in at 10. I got in at $10 and I was like, I just tripled my money or I doubled my money. I'm just so smart. Like, I'm going to sell half my Bitcoin here. And so I sold half my Bitcoin at 30, thinking I was a smart trader. And then it dropped to 2. So I was like, actually, I was smart. That was a smart move for me. I dropped it to $2. I'm pretty good. Yeah, I'm a good trader. I should start doing this more often. And then, obviously I made the stupid mistake of not buying back what I sold at 2. I had the opportunity, but I'm like, it could go
Yeah.
lower. It could go lower. It was less than $1 a year ago. So maybe it goes lower. And I mean, that happened to me again in the 2013 run. It went all the way up to like $1,200, and I was like on Mount Gox trying to trade Bitcoin. I'm like, I got a sense for the market. I've been in Bitcoin for years now. Like I got an idea it's gonna go up and then it's gonna do the same thing where it's gonna sell off again. So I'm gonna time the tops and I'm gonna buy the bottoms. And I lost a bunch of Bitcoin and a bunch of my Bitcoin again when Mount Gox blew up. So I mean, I was trying to be
Yeah.
smart. I was trying to be a trader. I was taking too much risk. So I mean, like, look, most people are not going to beat the market. There's a lot more professional, sophisticated traders in this market manipulating things. Like, look what we see recently. Nobody thought that Bitcoin was going to get down here that was in the markets. Of course, no coiners were all like calling this a Ponzi scam, saying it was going to explode, like Nouriel Rubini and Peter Schiff. I mean, really what we had was mass over leveraging and mass liquidations. Somebody's hunting liquidations to get the risk out of the system, to acquire cheap Bitcoin, whatever it is, doesn't matter. The point is, most people don't profitably trade Bitcoin. Most people get wrecked trying to trade Bitcoin. So I would advise people not to try to trade it. And eventually, I think the pain of holding will be worth it. And even myself, I wish I had just bought Bitcoin and held it. I wish I never tried to get
Yeah.
cute with it, because I'm still trying to stack back more Bitcoin to get to my original amount of Bitcoin that I had. But I mean, it's pretty like unlikely I'll ever get back to my original Bitcoin stack, selling half at $10. Um, but I do regret certain things where I've tried to be a trader and tried to time it, because I was looking at it like, oh my God, this is so volatile. I have to sell and reduce exposure and diversify. So the worst thing that people can do is diversify within crypto. If you think you're diversifying but you're buying other cryptocurrencies, you're just fooling yourself. Like, everything is correlated to Bitcoin. You're not diversifying if you're buying more altcoins. You're just taking leverage on Bitcoin. And if you
Yeah.
do it in a
Yeah.
bull market at the beginning, maybe you might get alpha over Bitcoin. You might actually catch like a Dogecoin or a Shiba Inu or a Solana or something like that and make a 10x over Bitcoin. But most likely you've held it down until now and you're back to like you've round tripped it and you're wrecked. So buying altcoins is not diversification. And diversifying outside of Bitcoin into other asset classes is also risky, as we've seen, like Peloton stock and Netflix and stuff. They're trading like shit coins. They look like shit coins. So it's really difficult to be in a position now as an average entrepreneur that's like maybe a SaaS founder or something like that, and you're like, I want to protect my profits. It's just like with Bitcoin, just don't get cute with it. Just buy and hold your own Bitcoin, put it on a wallet, get a cold card, go to coinkite.com and get a cold card, put it on there and just keep adding to your stack and just think about it like your savings account for a long time.
Yeah. Couldn't agree more. Very well said, for sure. One last question I do have for both you and Brad, because you did mention a couple of times, Bitcoin to 1 million. Like, when do you see that happening?
At this rate, I'd say tomorrow or next Monday, maybe. I mean, by the time
Makes
this
sense.
episode's released, maybe we're already at 1 million. No, man, I don't think it's gonna happen for a little while. I'm thinking like 2030. By 2030, we should be. Yeah, I mean, look, Bitcoin is either gonna be succeeding as a global reserve asset as more and more people start to understand what it is, like we've talked about this whole time,
Yeah.
or it's gonna fail. And if it fails and does not become adopted as an apolitical, censorship resistant global reserve asset, then it's probably gonna languish around like gold. So that's why it's like five people that are using Bitcoin with like 5% of their net worth. You've got the potential upside of a 30x or whatever we are to get to 1 million, or the potential downside of going to zero, which I don't think it's ever going to go to zero. But if you got 5% of your net worth in it, I mean, that 30x could be a substantial uplift in your portfolio and could change your life. But if you lose 5% of your net worth, it's not going to change your life. I mean, it may suck, but it's not materially going to like make you destitute or something like that. So, Costa, I think you described that earlier. Like, you've got a position in Bitcoin where if it goes to zero, it's not going to change your life negatively. It would suck, but it wouldn't be like, oh, I'm ruined. You can get by just fine. I mean, that's what I think most people should be thinking about with Bitcoin. I do sometimes wish I had the courage to recommend people go more into Bitcoin, but I don't want to get people wrecked. That's my thing. I'm like, I do think that like my friends and family, I think they should be like 50% in Bitcoin, because I think the shit's gonna hit the fan in the macro markets and stuff's gonna be very volatile. And I do honestly think Bitcoin's the lifeboat and it's really what's gonna keep people afloat. And it's the only like generational opportunity for our current generation to get life-changing gains if you hold it for 10 years. I don't think we have that in stocks or real estate or anything else. I think Bitcoins is our generation's trade, like it's our investment. And we're going to see a wealth transfer from the boomers that control 70-80% of the world's wealth down to millennials. And like, what are millennials like? We like Bitcoin. So I do
Yeah.
think that this is an opportunity over the next 10 years to benefit from a generational wealth transfer. It's our generation's real estate. Like the boomers had stocks, they got massive uplift in stocks. We got Bitcoin.
I like it.
Uh,
Jimmy, anything to add to that?
I mean, my answer, when $1 million a coin. For me, I think the clock starts when UBI begins. And I think the moment UBI begins in the United States of America, we're about 7 to 10 years away from $1 million a coin, because that's the biggest domino. That's the biggest domino that's going to fall. And everything, the reasoning why behind why Bitcoin was created. I mean, you could validate, what's happening with our currency, but like that'd be the elephant in the room, right?
That's
And
yeah.
yeah, every institution, like from yeah, even the naysayers, right, that make their living on disparaging Bitcoin, they're gonna be silenced when UBI begins, and what's going to begin to happen, in regards to Bitcoin adoption. Uh, you know, I think at the end of the day, uh, Bitcoin is sort of reflective of life in a way where, like, the biggest winners are going to be the most resilient. And I say that because it's like the most successful people the most successful Bitcoin investors are the ones that hold despite the downturns, hold despite the headlines, hold despite the chorus of people saying that Bitcoin is dead, and they even buy more when it's down. I got my mother to buy Bitcoin at 55K. She's a whole coiner at 55K, and she's talking about, you know, uh, refinancing some real estate to ape in and get more. That's our discussion,
Wow.
right? She's gonna end up owning more Bitcoin than me, right? But she's a very resilient woman. She's from Haiti. She
Mhm.
didn't know where her next meal was coming when she was growing up, right? Like, she was the smartest in her class, and she had no opportunity in that country. The Haiti produces very resilient people, and so I think that's why Bitcoin adoption is doing well in developing countries, because those are very resilient people, you
True.
know,
They're used to
and
volatility.
and so it's very used to the whole life is volatile. Like, I'm from Haiti, bro. Our president got killed by some Colombians, bro. Like,
Yeah.
that's the environment we're coming from, and so we're a lot more prepared for this kind of asset class, better prepared than Americans are,
Hmm.
you know.
Yeah.
And so I
Yeah.
think Bitcoin is for the world. So yeah, that's my position on that.
Love it. Love it. Well, guys, thank you guys so much. I think this conversation was very important. I think we're all in alignment in the sense that there's change happening. And I truly, unfortunately, believe a lot of people will be blindsided over the next decade. And hopefully, conversations like this will just help people position themselves better through what's happening out there. So thank you guys so much. Really appreciate the time. Really grateful to you both, and we'll definitely be in touch for sure. I'm sure.
Thank you.
All right. All right. All the best. Thanks again.
See ya.